Welcome to the Stay Ready Real Estate Podcast, where we stay ready so you don't have to get ready. My name is Emeka, your host, and I'll be interviewing a variety amount of professionals in the real estate industry to help you get 1% closer to your goal of buying your next real estate investment. At the end of each podcast, I'll give you 3 actionable steps that helps you get closer to just that. Today we have Antone Heyward, a licensed real estate professional, capital raiser, and investor. He has over $3 million in real estate assets under management. Before real estate investing, he architected strategic IT solutions that transformed business and fostered innovation. Let's listen to Antone. All right, Antone, can you tell the world a little bit about who you are and what you do?
Yeah, so Antone Heyward, I am the founder and CEO of Reignite Capital. In my previous life, I was an IT professional, many years in the corporate environment until I started getting into real estate. So I'm a licensed real estate agent here in Florida, in St. Petersburg, Florida. And yeah, I'm an investor. I focus in multifamily, but I also help from the real estate agent side do retail, industrial land, and things like that.
The jack of all trades. So you went from IT to real estate. Where did real estate even come from, right? I don't think that a lot of people in IT really talk about it too much.
Well, real estate came from me being in my corporate gig and getting to a point to where I felt that I reached a ceiling and I couldn't go any further, and also that I had to take control of my own financial future and start investing in something that would eventually allow me to get out of my W-2, and then I could, be my own boss and kind of set my own path. So
I
real estate
love
was that first thing that I saw that would, really catapult my my trajectory onto financial independence.
Cool. So it was the first thing that you saw. Was there, what else were you looking at? Were you looking at any other investment classes that you thought may help?
Yes, so I started like most people who are working in the corporate world with my 401k, where I was investing in stocks and bonds. I did the Dave Ramsey thing where, you're dumping as much money into your retirement accounts and you're saving as much as possible and doing all of those fiscally responsible things from that side of the house. But I didn't have the multiple streams of income. So when I really started thinking about it, real estate was the main vehicle that could get me a lot further in reaching my goals, where stocks and bonds I didn't have much control of. In my 401k, you basically kind of set it and forget it. And you know how the stock market is, where it's at the whims of the investors' emotions and also the algorithms that are out there. So it can go up and down and be as volatile as it wants to be. And I have no control of that. Well, real estate, I have much more control in pushing appreciation on the properties and adding value.
No, I love that. The control of real estate. It's literally you owning an investment and your decisions directly affect the money that you have coming in. So can you tell us a little bit about how much real estate that you currently have in your portfolio?
So currently in my portfolio, where I have been transitioning into multifamily, but currently in my portfolio, I have 3 rentals here in St. Pete. They're single family homes. And I'm keeping those kind of strategically because they're helping me. And maybe I'm getting a little too early here where I've left my W-2 now, and they're actually, supplementing my certain income and paying my bills and things like that. But I also have multifamily. I got into this group, Jake and Gino, you may know that, but 2 years ago I got into that group. I needed coaching, wanted to also get with a network of people who were also doing it. And from there I acquired, let me see how it's been, one the year before, one this year, and actually 2 this year. So I have 3 multifamily properties where there's 34 units in Wisconsin. There's 4 in Kansas City, and then 16 that I'm on a deal in Lakeland. Yeah.
Cool. And you have a mixture of both, which I love because our audience, some might be new, some might, have capital and kind of want to just jump into the multifamily. So
Right.
how did you acquire your single family deals?
Yeah, so the ones that I have local, some of them I actually purchased through a real estate agent, saw it on the MLS and got with an agent. Even though I was licensed myself, I focus mostly on commercial, so I don't do really any residential real estate. And I put in a bid and said, this is where I want to buy it at. And at the time, I got the price that I wanted. So that's how I got some properties through working with an agent. I've also worked with a wholesaler as well. So with getting with the local RIA groups that are in my area, I was able to connect with wholesalers, and a couple wholesalers brought some, not so hot deals, and eventually I got a deal where it's like, okay, this pencil, it was these were really bad, the ugliest of ugliest deals, but I really saw the vision of them. So I was able to acquire those where a wholesaler went direct to seller, got my price, bought those, and then went through a lot of renovation. Now, over the course of renovating these single family homes, I quickly kind of found out that it was not the path that I wanted to take, because there's a lot of work in renovating these properties, stripping out kitchens, bathrooms, putting in new kitchens and bathrooms, the flooring, managing contractors. It's a lot, right? So I really wanted to get out of that, which is why I started looking into multifamily.
That's the craziest thing. Like, you can have single family homes, but it might take the same amount of energy as a multifamily unit that's, could be from 16 units to hundreds of units. You still don't have to deal with as much with a single family, in my opinion. So
Yeah.
are you going to sell your single family homes like all together eventually? Or
No,
what's the long-term goal with those?
I've already sold a couple to get some capital so that I can invest in the multifamily properties that I've invested in here, and also to have some dry powder, as they say, or cash on the sidelines, because I did leave my W-2 last year. I wanted to make sure I had enough runway and safety net so that if my plans didn't work out well or something went awry, that I'd have something there to hold back. Because I do have a family. I am married, and I want to make sure that my wife and I don't go bankrupt, in the near future at least, or ever. But as far as selling properties, I've already sold what I'm going to sell. I have three now. I think I'm going to hold on to those forever. They also will be something that I think they've come in handy where when they've been vacant, because I actually had them as short-term rentals for a while. So when I had my children come and visit, I was able to block off times and they could stay in them, or have family stay in them when the hurricanes were coming through here. They're in pretty good areas where there's no flooding, and so on and so forth.
So you left your W-2. That's amazing. And have you seen your career, at least with real estate investing, take off even more? Or are you able to just are you how much more are you able to do now you don't have to worry about a corporate life, or now you don't have to worry about asking a boss to do something?
Yes, it really makes you are the boss, so you're 100% responsible for everything that you do or don't do. It is a thing where, being in the corporate world for so long, I was used to basically being giving orders. Okay, here's your direction. So when you get to work, you kind of have, at least some kind of list to go through and what you're going to do for that day. And now that I do not have a boss, it took probably a few months for me to get a good routine to where I would wake up, I would do, my certain things I do in the morning for getting ready for the work day, and then having a set schedule of, okay, I'm going to do prospecting this day from this time to that time. I'm going to network, or I'm going to go visit clients and these different types of things. So it is a big responsibility, but with great responsibility, it's it really rewarding because I can set my own schedule and my own time. I can spend more time with my grandkids. I'm actually a granddad now. And yeah, I like the time freedom, even though it does come with the responsibility of me having to manage my
Mhm.
time.
It's not like you weren't managing your time before. It's just, and then for those people who want to be just like you, they're waiting to leave their W-2 and just focus, directly in real estate or whatever they have a passion about. What advice would you give them to kind of get started to that path?
Well, yeah, if they're going to jump into real estate investing, I would first say try to do it, you know, as a side hustle, if you want to call it that, with their corporate job. If they already have a job, maybe try to do both just to see if it's something that you like. Because once you start doing it, some people may not like actually being an active investor. They might just want to be a passive investor. So this will be one of those things where it'll be good to figure out whether you want to do one or the other.
So if you were to, go back and start over again from the time you found out about real estate, would you change anything that you've done?
I think the one thing I would change is that I up front I did a lot of things myself. And for many years, I did tons and tons of work on my own where I was breaking my back doing a lot of the learning and getting the experience where I really would have probably, knowing what I know now, have gotten with a team or tried to find a team that I could work with. I'm really loving the joint ventures that I'm in, learning from other people, getting experience from what they bring to the table and adding value from what I bring to the table, as well as the syndications. So I think that team, building that team up would be something that I start a lot sooner if I had to do all over again.
And how do you find your team, right? What's the best way to find the right people? I would argue that you just can't jump in with anybody, right? So what did you do to find the people that you end up partnering with?
Yes, that is true. You don't want to jump into a deal with just anyone. You definitely want to vet people out. What I did, and as far as building my team, I did join a group, Jake and Gino group, and started, you know, getting with people, networking with people. I have an accountability podcast that somewhat started within that group. So people within that group, we meet every month and I started really just going back and forth, talking about their goals, my goals, what markets they're interested in. And we started to click with certain people within the in that group. And once something came to the table that, I had one of my partners found something local in their market, I was already comfortable with the person. I already trusted him. We had met at a couple of the meetups and things like that. So definitely get face to face with people, get online with people, start talking for probably months. And it actually has been months before I got into a deal with these people. But yes, it's really kind of get into a conversation and let it naturally and organically kind of come to be. Don't force it.
Don't force it. And then speaking of goals, you want to be partnered with people that have the same values and goals as you. What are your goals? Right? What are you looking forward to with real estate and what are you trying to get out of it within the next 5 to 10 years?
Yeah, so my goals right now have changed a lot. They were really focused on getting out of the W-2 and matching, if not exceeding the income that I was getting from the W-2. Right now, it's more of me making more transactional, buys and purchases into these investments. And also, again, building, again, stronger ties with the people that I'm out there partnering with. You're one of the partners that I'm on. I have different people that I'm partnered in with different deals, really building those stronger bonds. And a lot of my goals this year are outside of real estate. So the one is to do more transactions, but more of the other ones is to spend more time with family, to do more vacations, to learn more about myself and figure out what I'm going to do in that next phase where I'm starting to look towards retirement.
No, that's cool. And real estate's going to be the way to get you there. Do you have a time frame of, when you want to figure, certain things out? I know some people are very, I want to figure out myself by, 2025. Who knows? Because you never really mentioned like a cash flow goal or like a monetary goal with real estate.
I didn't mention any specific numbers, but like I've said before, the I've reached my goals of where my rentals that I have here local, they exceed my expenses. So I'm pretty good there. So part of part of the goal is to keep that going. Obviously, anything that I have already going, I want to make sure that I keep all of my rentals occupied, make sure there's good renters in there who are paying the rent, so on and so forth from that front. But yeah, I think the numbers are kind of arbitrary, and everyone has different numbers that they want to achieve. But yeah, I just want to do more transactions, meet more people, make better connections, and then focus on myself and family as I move forward.
Okay, so as you're focusing on those things, do you have an idea of like what kind of real estate business you want to be a part of? Do you want to just continue to partner with, the people that you like that you build relationships with? Or do you want to maybe start like a fund or, a core five of people who have a business that just acquires real estate throughout the country?
Yeah, right now, again, I'm building deeper relationships with the people who I'm already partner with right now. I have thought about doing the fun thing, but because I'm at that stage of life where I'm thinking more about maybe slowing down a little bit more
Mhm.
and spending more time with grandkids and family. I'm still on the fence of whether I want to 10x, as they say, and really start going hard again and ramping up a new business where it's taking up a lot of my time. So I do like that time freedom that I have. I'm able to schedule vacations with my wife and we can go different places. I'm able to watch my grandkids, as I mentioned, and yeah, that's kind of where I'm at right now. Is I'm doing the more relaxed, deals, working on the deals that I have, making deeper connections, and yeah, I'm not forcing anything right now in this part of my life.
Now, all the control is what you have in real estate since you left your W-2 is giving you that. And it sounds like the single family homes that you have is the main reason because it's covering your expenses. So there's been a lot of people on this podcast who say they would have went bigger first. Do you agree with that?
I don't know if I would have went bigger first. I do like the fact that I got to learn a lot doing it the way that I did. If I could go bigger, who knows? Maybe I would have gone bigger knowing what I know now. But because I came in inexperienced, obviously I wanted to start from a place of comfort where most people do. Let's start a little small. That way, if something does go wrong, it doesn't bankrupt you. So yeah, I started small. I'm a little bit more cautious when I get into things. I really try to overanalyze them a bit more than probably the average person, just because I want to avoid anything that's really risky and definitely don't want to put my money at more risk than I need to. So yeah, that's pretty much where I'm at right now.
It seems like, obviously real estate is long term, but have you compared, the returns that you have gotten through real estate, 401k, stock, bonds, etc.? Have you compared all of them and, determined which one's the best?
I would say that real estate has probably built more wealth quicker than I did with the stocks and bonds that I were doing in my 401k. So my 401k, I had a graph somewhere. I probably should have pulled it up where I had a turtle on a graph where year over year over year, my 401k and my investments in stocks and bonds were steadily growing. And then when I started buying real estate, my net worth just hockey sticked up because I was buying in an area here, lucky I'm in a great area here in St. Pete, Florida, where I started buying properties before COVID hit and everything just started going through the roof. So I bought them at a really good time. The properties that I own, and some of them tripled in value in like 3 years of me buying the property, which is somewhat unseen. So I would say that was more luck than it was planning. But real estate has really done much more than the stocks and bonds because I've been able to tap into the real estate without selling them. So like I have HELOC on my current property, the residence that I live in, because the equity has went up so much, which allows me to invest in more properties, being able to sell some of the other properties in order to get into multifamily. Again, it's real estate, I think, has been much better than the stocks and bonds that I have out there, even the 401k, because I can't even touch the 401k while I was working at the company. You can only pull out so much of that money, or else there's a lot of penalties. And I didn't even talk about that after I've left my W-2, that's opened up another opportunity. So I was able to take my 401k, put it in a self-directed IRA, and now I'm actually starting to leverage that IRA money to invest in multifamily. So it's really an asset class that I've grown to love and really trust in the value, and I can touch these assets and they're less volatile than stocks and bonds, and we can force appreciation. So I've started to even take more money and invest in this particular asset class.
That's cool. And one of the things that you said was, you bought at a great time and you said you were lucky. So what is a good time to buy?
Good time to buy is right now. I would say there is no, I guess, quote unquote, good time to buy. No one has a crystal ball. If you have a good deal that meets the criteria that you want, right, that you're looking for, and everyone has different criteria, whether you want a certain amount of cash flow or a certain amount of returns every year on your money that you're invested in. Find those deals. And if you find them, whether, the news is pumping out, everything's going to, down the tubes and you shouldn't be investing in real estate. If you find those deals that meet your criteria, buy those deals. So yeah, I don't think there's a good or bad time to buy. I just really analyze and underwrite the properties the way they need to be. And if they fit your criteria, go ahead and, and invest in those deals.
Well, how do I analyze these properties? Like, are you using any specific tools or apps that kind of help you streamline if a deal is good or not?
Yeah, so there's different underwriting tools that are out there. I have a spreadsheet from Michael Blanc. You might have heard of that one there, and was the multifamily deal analyzer, I think it is what it's called. And I pulled data from CoStar to be able to pull rental data and put it into this underwriting tool. And you're really just going through and trying to put what you're going to purchase it at, and then what kind of returns that you want to see based on some assumptions, a lot of assumptions, right? But these need to be conservative. You don't want to kind of pump it up to make it look good, that you're buying something, and then you find out that you you purchased the property, and then you were overconfident in your numbers, and then you find out the expenses were more than they were in your underwriting. Insurance was more, especially like here in Florida, taxes. And so just be conservative, make sure you have your pulse on what the market is with that property. And yeah, it's one of those things. It's kind of an art, not really a science. And yeah, I don't think you can just wake up one day and just start underwriting these these deals. You have to do it, get some repetition, and also seek people out who are actually doing it and get their feedback. Maybe let them look at your numbers and your underwriting to kind of get a second opinion.
Oh, cool. And how long did it take you to get used to underwriting and underwriting quickly?
And underwriting quickly, it probably took months for me to really get it, because trying to figure out one, the underwriting tool, because there's so many of them out there that you have to actually just find one, learn it, figure out all the different tabs, what information you have to put in it. But I would say it took me months to really kind of get in and say, all right, now I know what data needs to be fed into this thing for me to do a quick underwriting. And yeah, it, again, it's an art. It's definitely not a science. So you're gonna have to just do the numbers.
And then you said that you were investing in deals with your self-directed IRA. What's that process like? Is it, a lot of paperwork or what do you have to do?
Yeah, it's not overbearing at all. It's pretty easy. So you want to get with a certain custodian that does this, and I would say that's reputable. So the company I use is Havana IRA. Not sure if I can say names on here, but there's other ones out there like Equity Trust that do this, and they also offer training. So you can go to their websites and you can figure out what type of services they offer and get information on whether they offer, the right fees and things like that fit your particular investment style. But what you do is, if you have a retirement account that you can roll over into a self-directed IRA, typically you're not like with the 401k. I have to actually not be working at that job in order to actually start doing that transfer into a self-directed IRA. So if you're already with the company, if you're still with that company, you're probably not going to be able to do this. But if you've left your job, you have a 401k or retirement account out there, you would just roll it over into one of these self-directed IRAs, which means that more than likely you're going to have to cash out. So if you have any stocks, bonds, or whatever other investments, you're gonna have to liquidate them. Some of them you can do partial. With mine, I had to do 100% liquidate everything that was in it, then send it over to this custodian into the self-directed IRA. And from there, it sits in another IRA account, and you just need to figure out what you want to do with it. So you can invest directly from there. Just call them up, say, hey, I want to wire some funds into this syndication or this particular investment. It will go in there as the IRA. And that's really the big key, is that you're not investing in these deals when you use your IRA. It's always the IRA, and you cannot benefit when you use these particular accounts as well. So you will, when you do that investment, you just need to make sure that you're following all the rules. You can get with the custodian, let them know. They will tell you for sure whether you're doing it right or wrong. Now, once you make the investment, any disbursements needs to go directly to the IRA, and really you're covered. I have a couple different ways that mine is doing it. So there's a couple ways where I'm investing with mine, and one is directly from the IRA. The other is that I have an LLC that's set up, and they call it like a cash book LLC, where the money goes directly into that LLC's bank account that the IRA owns. I do not own that personally, but I am the manager of the LLC. So from there, I can actually just write a check for any investment that I need to invest in. Like if I want to buy a property outright cash, I can go ahead and buy that property. Again, all the profits go into that account, and I just need to make sure I'm following the rules. so that they don't come after me and penalize me for not doing it correctly.
With that, we're going to move to the next segment of the show where I ask everyone the same 3 questions. Question 1. What are the 2 books you recommend an aspiring investor to read?
Aspiring investor. Okay, the 2 I'm gonna pick. One is not gonna be related to real estate, but I think it's something that many people should probably read, and that's gonna be Clear Thinking by Shane Parrish. And also the other one is going to be it is a real estate book, an oldie but goodie, in my opinion, is The Millionaire Real Estate Investor by Gary Keller.
What has been the most impactful speech or lesson that helped you in your career?
Most impactful speech or lesson. I think it's going to be one that I heard from Denzel Washington. I don't remember the actual words, but really the key message was that in order to succeed in life, we need to be committed and be consistent in our actions. So I think that really stuck with me when I heard him giving this speech to this college, to be consistent and committed and consistent.
Cool. And if you could have dinner with anyone dead or alive, who would it be and why?
Oh, it's a tricky one here. I would probably say Napoleon Hill. I've done a lot of readings of his books, and I think he's been through a lot of things, and he's also come through those things, and successfully. So I would say Napoleon Hill, just because of what he's been through in the books that I've read, and yeah, he's been really successful, and I think he would have a positive impact on me.
Cool. And then what can the audience help you with, and how can they reach out to you?
So the audience can help me so the audience can reach me at reignitecapital.com. I am looking for more investors that want to be passive. A lot of the high net worth individuals who are out there working their job, their W-2s, their careers, who don't want to scrub toilets and do all the different activities related to managing real estate, but they want to see the returns.
Oh, cool. Well, Antone, thank you so much. I hope to have you again soon. And until next time.
All right. Thank you.
That was Antone, everybody. At the beginning of the podcast, I told you I'd give you 3 actionable steps that you can do today to get to your next investment. Step 1, figure out how many rentals you need to cover all your current expenses, or to at least match what you make now. The reason why I love this activity is because it starts to give you actual goals to go towards versus broad things. So you have an actual number that you need to go towards that you can look at every single day. Step 2, create a meetup, create a social media group. If you create a group, then that means that you're following all the people who know you or are the first ones to know. And then whoever joins it are the ones that are interested. So now you can start creating something that's reoccurring monthly or weekly to bring more like-minded people and to grow your network to possibly earn more business or possibly earn another partner. Number 3, if you have anything in your 401k or stocks, and you don't work for the company who funded that, talk to one of the people he recommended and see how you can use your IRA to invest in real estate. There's so many different ways that you can do. There's so many different ways that you can use. There's so many different ways, so many different tactics that you can use to invest in real estate. So using your self-directed IRA is one of them, and Antone just gave a list of some people who could help you. Until next time.